If you're a loan originator watching this episode, I want you to slow down just for a second and really hear what I'm about to say, because this conversation is not about being better at loans. It's not about knowing more guidelines. It's not even about having better products or better technology. This episode is about relevance. It's about why some LOs are becoming more valuable to realtors in this market, and while others, well, they're quietly being phased out, often without confrontation, without explanation, and without ever fully understanding what changed. I'm Dustin Owen, and this is The DO Show. They don't teach this shit in school, but they should. I'm Dustin Owen, and for the past 20 years, the mortgage industry has been my classroom. I've helped over 2,000 families become homeowners, built $1 billion mortgage operation from scratch, and earned my way into the top 1% of income earners worldwide. Along the way, I became a real estate investor, a business owner, and have invested in over 20 tech startups, even hitting a 20x return on one of my investments. This isn't theory, it's experience. Welcome to The DO Show, where I teach the lessons life taught me the hard way. On this episode, we are talking about the modern loan officer. But more importantly, we're talking about the modern LO through the eyes of realtors, because realtors are the most honest feedback loop in this business. They don't give second chances often, and they don't explain their decisions. They just move on. And right now, they're moving on faster than a lot of LOs realize. For years, this industry trained loan officers to believe that availability was value. If you answered your phone, returned texts quickly, and got deals to the closing table on time, you were considered good. In a low-rate, high-volume environment, that was enough. That environment masked a lot of weaknesses. It masked poor structure. It masked shallow conversations. It masked bad expectation setting. Heck, it even masked emotional inconsistency. And now, in a harder market, those weaknesses are exposed. Realtors feel it immediately. Here's the first truth the modern loan officer has to accept. Realtors today are not looking for someone who tries. They are not looking for someone who is friendly. They are not looking for someone who promises that everything will work out. They are looking for someone who creates certainty in an uncertain environment. Think about what realtors are dealing with right now. They're working with buyers who are more educated than ever, but also more confused than ever. Buyers are watching videos, reading headlines, scrolling social media, and absorbing opinions that lack context and nuance. They come into conversations anxious and skeptical and emotionally guarded. Realtors are absorbing that stress. At the same time, they are dealing with longer days on market, tougher negotiations, more price reductions, more inspection issues, more appraisal challenges, and significantly more fallout than they've ever experienced in the past 2 decades. Every deal feels heavier. Every mistake feels more expensive. So when a realtor chooses which loan officer to work with, they are not choosing based on charisma. They are choosing based on safety. They are asking themselves, even if they never say it out loud, is this loan officer going to stabilize my business or destabilize my business? This is where many LOs unintentionally lose trust. They believe their role is to keep everyone calm by being optimistic. Yes, we can make that work. Yes, that should be fine. Yes, we'll figure it out. But optimism without preparation is dangerous. Realtors do not need reassurance. They need accuracy. The modern LO understands that leadership means telling the truth early, even when it's uncomfortable, even when it risks slowing the deal down, even when it forces harder conversations. If a borrower or a buyer is stretching too far, you say it early. If the structure is thin, you say it up front. If the deal relies on perfect conditions, you say that as quickly as you can, because realtors would rather lose a deal in the first week than lose credibility at the closing table. Let me say this clearly. Realtors do not hate problems. They hate surprises. They expect challenges. They do not expect silence. The fastest way to lose realtor trust is to let an issue sit quietly in the background until it becomes unavoidable. When the first time a realtor hears about a problem is when it's already critical, that's not bad luck. That's poor leadership on your behalf. The modern LO slows the front end of the transaction down so the back end doesn't blow up. They ask deeper questions. They verify more than they assume. They challenge information instead of accepting it at face value. That doesn't make you conservative, by the way. That makes you a professional. Now let's talk about communication, because this is where most loan officers believe, quote unquote believe, that they excel, and very few actually do. Communication is not about frequency. It's about clarity. Sending more messages does not equal better communication. Flooding inboxes does not build trust. Noise does not create confidence. Realtors need to know what matters. They need to know what is complete. They need to know what is pending. They need to know what could go wrong, and they need that information without having to chase you down for it. If a realtor has to ask you for updates, you're already behind. The modern originator communicates proactively and definitely not defensively. You don't wait for the text, any updates? You don't wait for pressure to show up. You lead the communication. That consistency builds trust over time. And let's go ahead and talk about control. Realtors operate in an environment where very little is actually under their control. Inventory changes, buyer emotions shift, seller expectations move, appraisals surprise people, inspections create leverage problems, confirming what buyers probably already feared. Financing is supposed to be the stable part of the transaction. When a loan officer brings uncertainty or delay or confusion into the process, it destabilizes everything else. The most successful loan originators that I personally know, they create a sense of control even when conditions are difficult. They do this not by pretending everything is perfect. They do this not by overpromising outcomes, but they do this by clearly outlining timelines, next steps, and contingencies. For them, control is not about guarantees. Control is about preparation. And here's another truth that LOs struggle with. Realtors do not owe you loyalty. They owe loyalty to their clients and to their businesses. If you stop earning your place, someone else will take it. It's not personal. This is business. LOs who feel entitled to referrals eventually stop evolving. They stop sharpening their skills. They stop improving their process. They stop challenging their assumptions. The modern LO understands that trust is rented, not owned. And rent, guess what? That's due every single transaction. And let's talk about positioning while we're at it. If a realtor sees you as a vendor, you are replaceable. Vendors execute tasks. Vendors follow instructions. Partners, well, they give advice. Partners challenge and partners protect. The modern originator positions themselves as a partner by understanding more than loan programs. You understand how financing affects offer strength. You understand how loan terms influence seller behavior. You understand how structure can change leverage and negotiation. You help realtors think strategically, not just tactically. And that right there, that is value well beyond what's your rate. Another major separator in today's market is expectation setting. Borrowers do not just need approval numbers. They need context. Realtors do not just need green lights. They need realistic timelines. The fastest way to lose credibility is to oversell what's possible and underdeliver on what's realistic. The modern originator manages expectations better than anyone else in the transaction. You explain what is controllable as well as what's not. You outline best case as well as worst case scenarios. You prepare people emotionally, not just financially. Clarity beats comfort every single time. Consistency is another pillar realtors care about more than they like to admit. They want to know that the version of you that they get today is the same version that they will get the minute things go sideways. They don't want you to be confident until pressure shows up, and they sure as heck don't want you to be calm until something breaks. Consistency creates emotional safety. If your mood changes with your pipeline, realtors feel that immediately. The modern originator manages themselves first. You regulate your emotions. You control your reactions. You stay steady when others are stressed. That steadiness is what realtors trust. And let's go ahead and talk about understanding the realtor's business, not just your own. Do you understand how listings are won? Do you understand how buyers lose leverage? Do you understand how one financing misstep can cost a realtor a client relationship? If you do not understand the realtor's world, you cannot fully support it. The best loan officers speak the realtor's language. They understand pressure, they understand timing, they understand reputation. And because of that, their advice carries weight. And let's go ahead while we're at it. Let's address something directly. If your business depends on realtors feeding you deals, you are exposed. Strong realtor relationships are powerful, but dependency, well, that's dangerous. The most respected loan officers bring value both ways. They generate their own demand, they contribute opportunity, they elevate the relationship. Realtors respect loan officers who do not need them, but choose to work with them. Markets change, rates move, inventory shifts, but reputations are what lasts. Realtors remember how you show up in difficult markets. They remember who stayed consistent when volume dropped. They remember who did not disappear when deals slowed. They remember who stayed professional under pressure. The next gen originator plays the long game. They understand that what they do now determines how they are positioned later. Right now, too many loan officers are waiting for rates to drop, waiting for inventory to improve, waiting for things to get easier. That mindset is dangerous. Markets do not reward waiting, they reward preparation. This is the season where habits are built. This is the season where trust is formed. This is the season where separation happens. Being a modern loan officer is not about knowing every guideline. It is about leadership. It is about preparation. It is about communication. It's about consistency. It is about being the calmest person in the transaction when everyone else feels pressure. That, right there, that is what realtors want. That is what borrowers need. So here's the real question. Are you operating like a professional partner or like a participant hoping things work out? Because hope is not a strategy, but structure is. That is exactly why we built TLOP's Originator Coaching. Not as a course you watch, not as motivation you forget, but as real coaching, real accountability, and real execution for loan officers who want careers that last. If you are ready to become the kind of loan officer realtors trust, respect, and rely on, if you're looking to attract more realtor partners so that you can generate more leads, so you can fund more loans, so you can make more money, so you can save more money, invest more money, and in some cases, tithe more money, then use the link in the description and come check out why TLOP's Originator Coaching has been named the #1 value in business coaching for the mortgage industry. I'm Dustin Owen, and you've just tuned in to the DO Show. Do me a favor, do yourself a favor. If this is your first time on our channel and you like content like this, do two things. Go ahead and click that subscribe button, and remember, sharing is caring. Forward this episode to at least one person in your network who would benefit from having this same knowledge.